and welcome to the Wellness Hub podcast, a show dedicated to uncovering the future of healthy living. Each week, we aim to bring you content that supports your personal health journey through insightful conversations with amazing guests. We explore various topics ranging from healthy eating, technology, fitness, mindfulness, and more. Now let's join our host, Drew Munro, co-founder and CEO of UpMeals, a Vancouver-based food tech startup on a mission to make healthy meals accessible through technology.
Hello and welcome to the Wellness Hub. As always, we are thrilled to have you with us for yet another edition of Wellness Wednesdays. Every single week, we're hosting amazing guests and discussing important topics ranging from entrepreneurship and technology to health, wellness, fitness, and mindfulness. And as always, we hope that you find these conversations insightful and valuable on your own wellness journey. For our first 11 episodes, we've been talking to some amazing business owners and entrepreneurs who have shared their journeys and advice with us. But for tonight's conversation, we're talking about something a little bit different. For many existing and aspiring entrepreneurs, raising capital, finding investors, and scaling your business is usually a very foreign and intimidating task. How do I find investors? How do I know when I'm ready to scale my business? How much do I need and how should I pitch? What are investors looking for? Venture capital, convertible debt, angel investors, common shares, warrants. It seems overwhelming before you even get started. Tonight, we are aiming to help demystify some of this process through our special guest, a 20-plus year expert in corporate finance and accounting who's been involved in more than $300 million worth of corporate finance deals in venture, TSX, and New York Stock Exchange listed companies. We'll be learning about his history and background in corporate finance, what he looks for specifically in companies that he gets involved in, and his insights and advice for anyone looking to build their idea, scale their business, and seek out an investment. Entrepreneurs, get your pencils out. There's going to be a lot of knowledge being shared in this conversation. As we discuss these important topics, a reminder, as always, please comment with your questions on Facebook, on YouTube, on Instagram, or wherever you're watching. We will be answering audience questions all throughout the show. This is not the time to be shy for all the current or potential entrepreneurs out there. So without further ado, please welcome our special guest this evening, partner at Calibre Capital, Kevin Ma. Kevin, welcome to the Wellness Hub.
Hey, Drew. How are you doing? Thanks for having me. Really appreciate it.
Thank you so much for being here. So, Kevin, I'd love to start by asking you a little bit about your background in education. So I understand you went to UBC for a Bachelor of Arts degree. I'd love to learn more about what you studied and how you eventually made the switch over to accounting and finance. Yeah,
no, for sure. And just looking back, and I think at times it feels like I've been in school forever. And from UBC with my arts degree, and then accounting, articling, and then going through my CA exams. But at the end of the day, it was all worth it. I graduated from UBC with my first arts degree and a double in econ and sociology. And then in my third year, I started working at BMO. And that's when I really started open up my eyes and talking to a lot of people, talking to the commercial bankers that work there. There's a broker at Nesbitt Burns that always was very friendly and talked to me. And I wanted to learn more about business. And they said, you know what, the first place to learn about business is to start with accounting and start there. And I was just graduating at the time as well. So I looked into it and I hopped into the UBC accounting program, which was a fast track program to the chartered accountancy program in BC. So I went through that and basically just fast tracked along the way. And throughout the program, you have to start looking for articling jobs with the various firms. It's interesting. We'll go through our question down the road, but we went through it at quite a hard time. Graduated at the time of 2001 and 2002. That's when the tech burst, right. And it was hard to find an articling job, but muscle through it nonetheless. And I finished my articles and qualified my CA with Deloitte's, which is one of UpMeals' clients. And I worked there for a few more years and was part of the TMT practice group.
Wow, amazing, and such a great journey. Would you describe yourself as kind of a lifelong learner? It sounds like a pretty accurate description of
Yeah,
your background.
yeah, no, absolutely. And I think with anything that we do, you're always learning.
Mm,
When you're in a room, I'm always listening first and
mm,
foremost.
mm,
And when I'm on a new file, I'm learning about the business.
mm,
You can't take on a client, you can't properly finance them, you can't audit, you can't read their financials without learning about the business first. So
mm,
I'm always learning. I'm never the smartest person in the room by
mm.
far. So yeah, it's all about learning and growth.
Fantastic. And you work with companies in a number of different ways, everything from the things you mentioned, everything from investing to advising to even facilitating audits and things like that. So what do you specifically look for in a company before you decide to get involved with them in any way?
Yeah, it's a good question, and it's really simple. At the end of the day, it's all about a good business. Is this
Mm,
a good business? Does the business make sense? The growth that they're projecting, does that make any sense? Are they completely out of whack? If not, then you ask some more questions to dig into it. You look beneath the covers to look at the financials if they make any sense. I know you and I certainly talked about some of those things at length as well, and
mm,
they're very simple. It's not really rocket science. You need to have something that's healthy to start. If you're healthy, you're going to grow, and that's really the bottom line. And then we take another step back, and who is doing this,
mm,
and who are we working with? And obviously, you need to have a good business, but even better than that is a good group of people, right? A solid group of people. Investors are looking to not only invest in a good business for a return, but they're investing in people.
mm.
And if it's a good team, they know they can easily pivot and do something else and take it to the next level.
Amazing. So a business that makes sense and a great team, even if it's an early stage, it's still all about the people and the business. So anyone listening out there, please take note. That's super important. And I want to touch on something you referenced in your initial remarks that you've been working now for the past 20 years. You've seen a lot of things sort of come and go, and there's been a huge rise in technology and data analytics. Everything's real time. We can access anything pretty much at our fingertips. How has this real-time availability of data kind of changed the landscape of finance where you work?
Yeah, it's a very good question as well. In the area of finance of where I work, that doesn't change too much because a
Mm,
lot of what I do is we're looking at historical financial information. That's
mm,
all past tense. It's all about how quickly your team and any company can produce historical financial information we need to audit them, we need to look at them in a verifiable, meaningful way, and then you need to communicate them in a very timely basis. So from that standpoint, like, technology has totally enhanced that. But from what I do and what we look at from a baseline, we're looking at stuff that's happened in the past. But however, that being said, that information is the best source of information to predict the future, right?
mm,
So it predicts and validates your forecast. So you're telling me you're going to do you're telling me you're going to do $10 million, but you did $2 million last year. So how do you get from A to B? Like, where's the connection there,
mm,
right? So the historic is always a good indication of what's going to happen in the future, right?
mm,
Obviously, plus and minus all of your various assumptions. It's really the real time communication and information on communicating to various groups, and that real time, I think, is so invaluable.
mm. And a really important question, because to be honest, this was something that I struggled with, early in my career and at the very conception of starting what we're doing at UpMeals is like where to start, right? When you want to raise capital, like where do you even begin? It's so overwhelming and there's so much information being thrown at you. So what advice would you give for someone, an entrepreneur or someone running a business that feels like they're at a point where they're ready to raise capital? What advice would you give them to get started?
Yeah, so obviously you need to have a plan,
Mm,
and I think you'll see it. You'll experience it. You'll be at a crossroads where I can't move anymore. Whether you're short of inventory, you'll need an inventory line and working capital facilitation, or you're growing out of your space. Then you need a capital asset injection. You need to find a new warehouse, new real estate. You'll quickly realize that. And once you figure that out, so do I have enough people that I'm working with? Am I working with the right people? So that will be obviously your inherent constraints on human resources. So, it's either working capital, your capital assets, or your team. I think you'll quickly realize that as you're progressing and your business best. What are the hindrances for you to take it to the next level? And as long as you've got your baseline and your house in order, I think you'll quickly realize that, oh, do you know what? I really can't move any further until I have an extra $100,000 to buy this inventory, so I could fulfill these orders. You'll know. You'll definitely know.
And so that you touched on a really important thing. I just want to extrapolate on that quickly for any entrepreneurs that are listening out there. So do potential investors like to see that sort of a dynamic where there's almost, your business is solving a problem, but there's almost like an opportunity within the business where capital fixes that problem? Are investors looking for that in the opportunities?
Yeah, no, absolutely. I think the investors are looking for, they're looking for a return first and foremost, but they're also looking for, depending on the type of company and the phase of growth, they're looking for a high growth for something similar to UpMeals, for example. What is the high growth potential? Where are you at in that curve? And where's the blue sky? What more can we expect out of a company like this? Where is the exponential growth, right? And with that, I think, again, you need to go back to your team. You need to formalize that plan and solidify these forecasts to knock every single one of these assumptions out of the park.
I mean, I can envision all the entrepreneurs that are listening to this just like scribbling furiously right now as you're talking. You're giving such great advice. One of the things that, and again, this is part I identify with this question, that a lot of young entrepreneurs, they don't have a formal background in finance. Most of them aren't professional accountants. They're hardworking entrepreneurs that have a great idea. So what are some of the common mistakes that you see young entrepreneurs making, and what advice would you give to help them avoid those?
Yeah, do you know what? It's, again, you need to do your homework and you need to prepare. It sounds very simple, but it's very hard to execute. Okay, you need to articulate your idea. You need to articulate your business. You need to articulate your value proposition, why invest, and why now. I think if you can nail and answer all of those questions yourself, you should have no problems going into a 10-minute pitch. And I think 10 minutes is all you need. And within that very short time frame, you can articulate what your business is, where it's at, how are you going to grow from there, and why buy this company now. I think you'll nail every single meeting.
And that's something that I think a lot of entrepreneurs, especially first-time entrepreneurs, kind of struggle with, is like, how long should this pitch be? Like, how do I do a pitch? So as someone like yourself, who I'm sure listens to hundreds of these sorts of pitches over the course of a month or so, is there a sweet spot for you? You referenced 10 minutes, but can it be more or less than that? Like, what's a window that you should give for an entrepreneur to be mindful of that investor's time?
Yeah, no, I think it depends on your audience and your time frame as well. If you're in a series of speed dating type presentations, you only have a 20-minute window. You better make your presentations less than 15 minutes and reserve a bit of a buffer for Q&A, and just respect your guest's time to get over to the next meeting, right? Yeah. So that's. Yeah, like I've done it. I've been on both sides, on the buy side and the sell side. I've been in situations where I'm pitching all day, every 20, 30 minutes. And if you cannot catch their attention inside the first 10 minutes, you've lost that opportunity.
Super valuable. And I think a lot of times people who haven't raised capital are sort of unsure where to start. Like, they sort of, they view, and at least I did, they view like investors or angel investors as sort of these like mythical rare creatures, that like a rare Pokemon that you have to go out and like find them, and maybe you'll see them and maybe you can catch one, right? Like, but I think the truth is that there are investors out there who are looking just as aggressively for good opportunities as there are businesses that are willing to pitch them. So how can newer businesses find the opportunity to connect with investors for their business?
Yeah, it's a good question. And just going back to the first part there as well, and just finish off my previous thoughts, where you also need to be realistic about your value, and that will inherently attract the different types of investors. You need to remember that when you're raising capital, you're asking for help. So what do you need to recognize? You need to recognize the value of this help and reward your shareholders and your investors who are coming in to support you. So I think that's first and foremost the most important thing when you're out there looking for investors. You need to give them something, right? And something is a return, right? A return. What is it that makes this investment attractive, and how will I make money here in the future, right? So, yeah. And then in terms of looking for investors, you just have to go out and network. Don't be afraid to always sell. It sounds a little corny, and it may seem annoying, but it's not. It never stops selling. I mean, I'm an accountant by trade, but whatever you do, you have to sell. Whether you're a partner at a CA firm, you're selling your services. We operate a merchant bank, so we're also selling our services. We're selling our value as to why should companies work with us, why invest with us, why let us put money into their company, why out of hundreds of brokers, investment advisors, and merchant banks out there, why you? So we're also doing the same thing. So don't be afraid to sell. Always keep that hat on and put your best foot forward.
Awesome. And I think that sort of might remove some of the bottlenecks. I know I always felt like, you sort of have this wall up where you realize these are busy people and you just like don't want to bother them. But there's also that understanding where, you've got a great business and this is an opportunity, and they are open to opportunities too. So advice to the perhaps a little bit shy entrepreneurs out there to come out of your shell, be selling. There are investors out there that want to hear from you and want to hear about your business. Great advice. And you referenced something previously I want to touch on, because I think it's super, super important for companies. And I think it's one thing that companies struggle with early on is determining their valuation. So, and it's also one of the most hotly contested items in any investment deal, especially for early stage companies. So, what tips do you have on how to arrive at that number and be able to defend it?
Yeah, that's a great point. I think you need to work with enough advisors as well, and you need to understand your business. What is your business? What is your industry? There's a lot of metrics out there that you should be able to find and compare yourself to. You need to make sure you're comparing yourself to the right peer group, so that it's not a high growth tech sector that's basically valued at 30, 40 times revenue, that you're not quite there yet, right? You need to be realistic and specific with how this affects your business. And then make an argument for it, that how you outshine these guys, how you outshine the rest, or how your value, right? So if the rest are valued at 40, 50 million, you're coming out at 10, I would actually think that's great. That's great because you've got all of this potential. Well, obviously after you've communicated this, that you've got all this potential. Our peers are valued at 20, 30, 40. We're at 10. We're at 10 because of this, and we can get there because of this. So.
And I think, you've hit the nail on the head, that you have to know the industry you're in, know what the companies are being valued, know what the market is performing, and be able to make a case as to why you belong in that race and where you're at and what the upside is. Super, super valuable. I'm going to ask you sort of maybe this is a tough question for you as somebody who's been in the industry for 20 years, but I want to know, just for our listeners out there, what is the single best piece of financial advice that you have ever received?
That's a good one, and I had to think about that for a bit as well when I was going through some of this. And I think I would take it as a bit of a personal advice where you're building your own balance sheet. Start early, build your statement of net worth. It creates an overall picture for you to measure yourself. And also from a company's perspective, you're building a balance sheet. You're building your asset base, you're reducing your liabilities, and then you're building equity. You're building equity by doing good at what you do with your business, and you're making money. You're making top line and bottom line. That contributes obviously to your balance sheet. So personally as well, where you're out there early on in your career, you're generating a salary, but you take that salary and you redeploy it into investments. That turns into passive income. Passive income is probably one of the best sources of capital that you could ever make. And then you take that capital and redeploy that. Again, that's all about building your balance sheet.
Wow. Build your personal balance. That's incredible. You could probably start a podcast tomorrow with that title and I just go. Like I would watch that starting tomorrow. That's amazing. And I want to talk something. This is a bit of a new trend. I think, we saw this explode kind of earlier in the pandemic with GameStop, like with the surge of newcomers from the internet to the world of investment and, retail investors. In your opinion, what effects in the market do you think we're going to continue to see over the next few years from this huge influx?
Yeah, it's a good point. And I think it's already there. But I think speculative trading, such as the ones on the AMCs and GameStop, they're not good for capital markets. It just creates too much volatility. I think those aren't investors; those are traders. I believe in longer term investing. There's even shorter term investing where you can go in for a quick trade. But that with the AMCs and basically all the Reddits, there's just too much speculation that doesn't create any value, right? So I'm about long-term investing. I think it's actually wonderful where we're getting more people in the markets and interested in the markets. What that means for people like myself is those are eyeballs. Those are retail investors. They could be potential shareholders. You need to pay attention to those as well. Very much so, because they create a lot of volume of activity in the markets, which can help your company once it's public. Right.
Wow. And if you're just joining us, we're here chatting with Kevin Ma, the partner of Calibre Capital. We are demystifying all sorts of questions about investing, raising capital, finding investors, personal finance. And we are going to be answering your questions live. If you have any questions, please message us. We will be answering them all throughout the show. I want to touch on, Kevin, something you brought up earlier in the interview, which is starting your career in the middle of a really challenging period. As someone who's now been 20 years in this industry, you've been through actually three major financial events with the tech bubble, the financial crisis, and now, of course, the most recent global pandemic. So from those three major events, like what lessons have you learned? What takeaways do you have from going through those three events?
Oh, very good question. And I'm actually not that old, but thinking back, I have experienced three already. Like I said, the first one back in 2001, 2002, just as I was starting my I guess real career, jumping into the accounting space when the tech bubble burst. It was very hard to find a job. I think at the time Deloitte only hired 6 guys, or not 6 guys, but 6 people.
Yeah.
Versus about 200 students fighting for those articling jobs. It was a scrap.
Wow.
So that was very interesting.
Oh my God.
And at that time, obviously, I was a little too early on in my career to even notice the market crash and never really touched on the markets. 2008 came at quite an interesting surprise, and that was really my entry point into my professional career. I just got my CA back in 2006, but I left the firm in 2008 and joined a mining company in 2008 that same year. Very good, prominent mining company, by the way. But little did I know with what the market would do, it completely crashed. The company that I joined there, the stock went from $3.50 when I first joined down to 50 cents. Wow. And then I took a step back and I'm like, what am I doing? Did I do the right thing of leaving the security blanket of a big 4 firm? to joining a junior mining company that just had the stock tank. But little did we know, and obviously I had to believe in the company, believe in what we did. We secured $50 million worth of financing just before the market crashed in September, October of 2008. And, we were completely insulated in the entire event.
So you had a war chest built up, sort of ready to go. Yeah.
Oh, yeah, absolutely. Yeah. Our entire team kept our head down, built out our mine and our mill, and basically took the company into full production in 2011 when silver were at all-time highs. So I think at that point we hit $10. Right. Wow. So it was literally from the bottom all the way to the top. That was tremendous. To learn what I learned obviously would be to take the risk. If I had the capital at the time, I was earlier in my career, put it in, it would have done beautifully. Right.
That's not a bad return. Yeah,
that's not a bad return at all. But I took a lot of learning from that experience, and that's really enabled me to do what I'm doing right now. So definitely no complaints. Fast forward to last year, back in 2020, I did not make that same mistake. Obviously, I've been very fortunate, done pretty well over the last few years with our own transactions, and took a lot of equity with our deals, and obviously took that capital and redeployed it and bought the dip in 2020. Right. So it wasn't for a trade. It was about long-term investing, and everything has definitely materialized from the bottom of that dip in around March of 2020 last year. Wow. Right. So it's about risk as well, and you have to invest smartly. The CEO, one of the ex-CEOs of Gold Corp, we were out for a young mining professional dinner one night, and one of the best things he told us was, you got to take the risk. You find the opportunities when the market is down, and you have to go for it. Right. So when 2020 hit, the markets went down. Obviously, it's a little bit terrifying to see your portfolio dip like that. But that's not going to be the long-term scenario here. So we did it. We deployed our capital, and it's worked out quite nicely for us.
Wow. And just speaking, it's almost kind of like an entrepreneurial journey that you went, because you had this big four accounting firm job, and it would have been easy to stay there, right? It would have been so easy to stay there, but you would not have had that crazy roller coaster of going from the bottom all the way to the top that you had at this other company, which probably had so many lessons. So that's incredible to share. It's just like with anything, no risk, no reward, right? So very happy to hear, and thank you for sharing that story with our listeners. We've got a question that's come in from Instagram now from one of our listeners. This is a really good question, actually. In your opinion, is networking an all seasons event, or is there a particular season where networking can be more successful?
That's a good question. I would say you're always networking.
Yeah.
You're always networking. It was one thing I was going to touch on with you too, Drew, is when you're selling, you don't have to be selling. You can talk casually, and I would even take it one step further as to what I can do for you, not what I need to do, what I'm asking for you to do. I'm always out there asking to see, what can I do for you? Right. If you approach it like that, it comes across as less aggressive.
Yeah.
Although aggressive is good too. You need the go-getters out there, but you're always networking. I wouldn't particularly focus on a season. If you find an opportunity, go connect with someone, especially with this digital age. I just recently hired a summer student, and that's exactly what I told him. And connect with at least 10 people on LinkedIn every week. I want you to connect with them and build a meaningful connection and a relationship, and ask them about whatever you want that will basically add value for yourself. Right? Don't ask them for a job.
Yeah.
You're trying to learn about them, learn about what they do.
Amazing. So yeah,
no particular season.
Yeah. All right. So no off-season entrepreneurs, always on, always working, right? Always networking. You've heard it. You've heard it from the man himself. And adding value. That's a great principle as well in every interaction. That's awesome. I want to ask you something. You've talked about some sort of tough experiences and tough periods in your career, but for you personally, what would you say is the toughest lesson that you had to learn in your career?
Yeah, I've made a lot of mistakes. Made a lot of mistakes over the years, and I still continue to make mistakes. But the best thing you can do is learn from them, and learn what not to do. Learn about learn about the people that you don't want to deal with. And I think for myself, I'm inherently nice, so I don't speak up enough. If you don't want and don't like something, you have to make it known. You need to have a voice out there. And also, I would say you got to be realistic with yourself and what you can and cannot do. If you need help, make sure you ask, because there's a lot of help out there.
And that's great advice. One of the things that is sort of a next level thing for a lot of companies as they scale is the board of directors. So a lot of entrepreneurs might not even be thinking about that yet. But the board of directors is such an integral part of a company as it grows and as it scales for a lot of reasons. So in your opinion, what comprises of a great board of directors, and what should companies be looking for when they're building that board of directors?
Yeah, it's a tough one, building a board. And I'm not a people expert by any means. I've worked with a lot of people, and I think I've come to learn that you need to have a wide range of skill sets on the board, Drew. And also they should be complementary to each other, and also to the CEO. So at the end of the day, this set of board members are working in the best interest of shareholders. That's what they're appointed to do. And that has to be the first and foremost mandate. And then it really depends on their synergistic and their synergies working with the CEO. It gets quite complicated, obviously, when you are out there financing and you have a big shareholder investor that they now want a board seat, or you've acquired a company and they required one or two board seats, and inherently the objectives and biases are not the same. But if you can find a way that everyone can steer in the same direction, and that'll help. Definitely.
Amazing.
So it's not an easy thing.
Yeah,
you need to find the right people.
There's a lot of things throughout this process, and I think other entrepreneurs will probably resonate with this. I know I do. Is that it's part science, but part art and part people, right? There's a certain part where the numbers are incredibly important, but there's an art and a feeling to a lot of these interactions with building a business. And I to be honest, I love that side of things, and it's powerful. And thank you for sharing that. I want to ask you a question. We're on the Wellness Hub. We're on Wellness Wednesdays. We can't all be working 24/7. I know you're a busy guy and you get hundreds of emails a day, but I want to know, what do you do for yourself when you are looking to unwind and unplug and disconnect from all this technology we've been talking about for the whole episode?
Yeah, no, unwinding is very hard. I struggle with that every day myself. It's hard to shut off. It's hard to be disconnected in a very connected world. These smartphones are evil, but they're also very useful in a sense that used in the right way, it helps me with preparing the next day that much easier. That I'm not looking at 1,000 emails that every single one of them are urgent. I'm a naturally responsive person. So that's why these things are a little bit stressful. I also have a young family at home too. So I really try to stay away from being on my phone and just working and not paying attention to them. So, I do a lot of coaching with the kids' activities. I coach my daughter's soccer team. That was a great distraction just to get away for at least an hour, not to focus on anything but her and her team. Oh, I found that very rewarding. It was very refreshing, and I think I'm going to do it again.
Nice. I can't. You're so nice, Kevin. I cannot picture you as being one of those like crazy parents on the sidelines, like screaming, and while coaching the soccer game. I hope not. I'm sure you won't. I used to play soccer, and I know I've gone through that as a young player. But that's what an amazing experience. We're gonna talk. We're gonna ask a few more questions. We're gonna open it up and take some audience questions as well. I hope that's okay. We're every conversation we have here on the Wellness Hub is different. Except there's one question that is always the same, and we love food. We're passionate about food here. I got to know what is your go-to meal, Kevin?
Oh, my wife and I, it's definitely sushi. Yeah. So if it's just the two of us, we'll head out for a nice place. But if it's for the kids, and close your ears, this is a healthy wellness hub. With the kids, it's definitely burgers. They like their junk food.
We're in a safe space. You can talk about that and nachos and hot dogs. Yeah, don't worry about that. Amazing. We've got a question coming in from the audience here. Are there any books that you would recommend pertaining to finance or raising capital?
Actually, do you know what? I would recommend a book on networking. I think it's called The Frog and the Prince. That's very interesting. It's about, again, it goes back to that concept about what can I do for you? And I think that last question is about networking. And if you can kind of build through those skill sets and really hone in on your people skills, you can do anything. It'll make financing that much easier.
And I want to talk about this is another question that's coming in here from the audience. Is there how should somebody know who's running a business, how much should they seek to raise? Is there a formula for them to determine what that amount is, in your opinion?
Yeah, that's a tough question, and it's very specific, and it's very hard to answer as to how much you need. I'm an accountant, I'm a finance guy, so it's all about crunching the numbers to decide how much do you need, first of all, and there you go from there. So you need to look at your financials. You need to look at how you're doing. And then you also need to look at whether it's debt or equity. Can you take that much liabilities? Can you mortgage that much to buy that house? If it's not healthy, you can't take it. If you can't support the interest payments, you can't take it. If you're not willing to give up 50% of your company, that's not the right avenue either. So it really depends. It's a hard question, and it has to be pretty specific to the situation at the time. So happy to look at those scenarios when the time comes.
Fantastic. Oh, thanks for making yourself available. Be careful. Your email box is going to be blowing up as soon as we get off the air here. We've got another question coming in from Facebook here. In your opinion, what skills are important to build a successful career in finance?
Yeah, no, finance is actually quite broad. There's investment banking, there's marketing, there's the buy side, sell side. And I started through accounting, and accounting naturally there are various disciplines. So there's accounting tax, accounting sales. So I would be biased towards accounting. Learn about the business. Learn about the business first and know the numbers. In finance, you have to know the numbers. You need to know how certain ratios and how inventory turns, how everything matters, and everything is connected to your financials. Its numbers actually don't lie. All right, so know your numbers.
Know your numbers. I think that's the closing statement. I think that ties in everything here. And even for non-accounting focused entrepreneurs and professionals and CEOs, know your numbers. You have to do the work, be prepared, do the research. You've heard it right from a very experienced professional like Kevin, right from his mouth. So I hope everyone found this incredibly insightful and valuable. And Kevin, thank you so much for joining us here. Where can people go to learn more about the work you're doing at Calibre Capital?
Yeah, I'm a pretty private person, so I don't have my things out in the public domain. But my profile is regularly updated on LinkedIn. A lot of my transactions, I'm either involved as an executive officer or director. So press releases, I'll be part of it. Either that, my company will also be press released with, depending on the type of transaction we're involved with. We just did a pretty large M&A transaction in finance, so we're press released right in there. So maybe just follow what we're doing on LinkedIn, and our names are always out in press releases.
Okay.
Yeah.
Perfect. Well, Kevin, thank you so much for making the time out of your very busy schedule to join us, answer some questions, demystify some of this scary stuff for a lot of entrepreneurs. I really appreciate it. I know a lot of our listeners do too. So thank you so much for being here and for making time.
Thanks for having me, Drew.
Wow. I hope the entrepreneurs and everyone out there listening were taking furious notes during that session, because Kevin's advice and info was just so incredibly valuable. Experienced finance professionals like Kevin, they're often receiving hundreds of emails a day. They watch countless pitches, and it's incredibly generous of him to join our program and share all of that experience and advice with us, the listeners. As they say, ideas are common, and execution is what matters. So despite all of the passion, all the brilliant ideas, having the resources to execute on your idea will largely determine your success as you grow. Think of cash like oxygen to your business. Without it, your business cannot survive. I admit that for much of my own early career, I was a founder that pursued bootstrapping my business at all costs instead of investing the time and gaining skills and knowledge I needed to seek out what financial options might be available to me. I certainly wish I had connected with somebody like Kevin much sooner than I did. We hope that Kevin's advice today helped to demystify the processes surrounding seeking out investors, funding your business, and all of the other great topics we discussed. It can still be intimidating, but as we touch on so often in our Wellness Hub episodes, we learn by doing. And 100 no's could lead to the one yes that matters. And remember, if you're an entrepreneur, this is what you signed up for. Flinging yourself into the unknown should be embraced and celebrated on an almost daily basis. Live it, own it, and enjoy it. Thank you so much for tuning in tonight. If you'd like to see more great conversations like this, please remember to like, comment, and subscribe, or follow us on YouTube, on Instagram, or LinkedIn at UpMeals. We'll see you next Wednesday right here on the Wellness Hub for another great conversation. I'm Drew Munro. Until then, take care.